What's up guys, this is Josh here. Gap insurance is something that many people don't know about when buying a car, but it is something that can truly save you from a disastrous situation. So in this video today, we're going to cover what gap insurance is and some of the situations that you may want to consider purchasing gap insurance. And if you're new to the channel, hi, my name is Josh and I upload videos every week about all things related to your finances. So if you care about your financial future and you care about your money, first go ahead and obliterate that like button, then go ahead and click that red subscribe button until it turns gray, and that way you don't miss anything. So is gap insurance for everyone? And the quick answer is no. Gap insurance applies whenever you are receiving a car loan, and this is only whenever you are receiving a car loan. So if you are paying for a car in cash, you will never be asked or should you ever purchase gap insurance, and here's why. Gap insurance is additional coverage that you can purchase to protect yourself in case if, just say you bought a car and you went out, had an accident, and now the car is totaled and you owe more on your car loan than what the car is worth. At that time, your insurance company will only cut and write you a check for what the car is worth and not how much you owe on the car loan. And this is where gap insurance will come in, because at this point, this is where the gap will cover the difference. So here's an example of how gap insurance works. Just say that Sam buys a new car for $40,000. Sam goes out and God forbid she gets in an accident and she has a total loss of the car. At the time of the accident, she was still owing $35,000 for the car, but at this time the car is only worth $30,000. Since the car is completely written off as a result of the accident by the insurance company, Sam's insurance policy will only reimburse her what the car is worth, which is a value of $30,000. Because Sam owes the car financing company $35,000 and the insurance company only gave her $30,000, that means she's still responsible for $5,000, which is the difference between what she owed and what the car is worth. Even though she no longer has the car anymore, she's still responsible for the $5,000. So by purchasing gap insurance, if anything should happen to the car, you can walk away and not owe anything on the car that was totaled and you no longer have in your possession. And keep in mind, without gap insurance, you are still responsible for your insurance deductible. So when should I consider gap insurance? First, you want to consider gap insurance if you finance a car and made little to no down payment, because without making a significant down payment at the dealership, you will now be upside down on your auto loan the moment that you drive that car off the lot. Then you want to consider gap insurance if you traded in an upside down car. And what I mean by that is you trade in a car that's worth more than what you owe on it. When trading in an upside down car, the dealership will add what you still owe on that loan balance to your new car, not unless if you pay the difference up front, meaning that if you do not pay the difference up front, you will definitely owe more on your new car than what the car is worth. Hence, you need gap insurance. Or if you plan to put miles on the car, nothing will reduce your car's value quicker than driving a lot. The faster that you rack up miles, you're driving that car into the ground, and the faster that you will depreciate that car's value. And it's likely that the value will drop quicker than what it can keep up with the payment pace. In other words, that the value of the car will drop faster than where the payments are going down. So you may want to consider gap insurance if you are driving a lot. And also you want to consider gap insurance if you have taken out a car loan with a term longer than 60 months. Because a longer term loan takes longer than usual to hit the breaking point. And what I mean by the breaking point is what the car is worth to what is owed on the car. What is the cost of gap insurance? Auto insurers typically charge a few dollars a month for gap insurance, about $20 a year, where lenders will typically charge a flat fee for about $500 to $700 for gap insurance. Remember, if you add the coverage to your loan, you are now paying interest on your loan, and the average interest rate for a new car is almost 6%, meaning that you could pay over $800 for gap insurance at the dealership, where you can simply say no thanks to the dealership to purchase their gap insurance, and you can go on and buy your own gap insurance for about $60, and all of this is over a 3-year period. So I do hope that this video helped out in some way, and if it did, be sure that you share this video with someone who may be in the process of looking for a car, and check out the top video over there on the 5 best ways to save money on your dream car. Subscribe by clicking the icon right here, and I will see you in the next video.